The market is seeking the weakest hands. Were there stops right there? No, there were not. Maybe there's stops right above. The point is, the market is seeking to take out the weak hand, and it thinks the weak hand is right above $24. I'm sorry, well, 2,400 in gold, $30 in silver. Anyway, so the market is going to find out if there's buying or selling at $30. And if it doesn't find out today, it will probably find out tomorrow.
VinceLanci provides an optimistic market outlook for gold and silver, driven by strong institutional interest, diverse buyer cohorts, and event-driven buying behavior. These factors contribute to a stable and potentially upward-trending market for precious metals. While gold's record-setting rally has captured headlines this year, silver is experiencing a more vigorous run, benefiting from robust financial and industrial demand. Silver's recent highest close in 11 years is significant, attracting attention from various market participants, mainly managed money and macro-discretionary investors who still need to be heavily invested in silver. Large institutional investors will begin to pile into the market if the silver market maintains its current levels until the end of May. Silver has soared by over a quarter this year, outpacing gold and making it one of the year's best-performing major commodities. Despite its strong performance, silver remains relatively cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. Gold's price is trading higher on Friday, in the $2,400s, bolstered by upbeat data from China that brightened prospects for the country with the world's largest market for gold. During the North American session ahead of the weekend, gold dollar traded above $2,400, posting more than 1.5% gains amid higher U.S. Treasury bond yields. The non-yielding metal extended its advance and threatened to crack the all-time high of $2,431. A raft of secondary data released on Thursday was mixed in the U.S. Federal Reserve officials repeated their mantra that inflation was still not coming down fast enough to contemplate cutting interest rates, which neutralized the gold price. Join us as we delve into VinceLanci's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
First, a couple comments looking at the charts at a very, very broad level. Silver, I believe this was the highest close in 11 years. And the reason that's important, other than the fact that it's the highest close in 11 years, we're not the only people who look at those. Managed money looks at those. That's macro discretionary money. That's the big boys. The big boys aren't really in silver yet. They got into gold in March. They're not in silver yet. And if this market is anywhere near this price come May 30th, they're going to pile in. And I'll show you what you can expect if they pile in based on what they did to gold. Gold, hovering below 2,400 with no real selling, just patient buying that gets impatient periodically. Measured moves. The comment about gold focuses on the fact that I've said in several different ways, there's no real selling, there's only buying. There's no reason to short this market anymore. There's just reason to buy dips. Correlations don't matter until you want to buy. All those things mean the same thing. And that is, there are a lot of people who want to buy gold with varying levels of patience. Some of them will wait for a $300 dip. They may or may not get it. Some of them will wait for a $50 dip. They may or may not get it. Some of them will wait for a $10 dip. They may or may not get it on their schedule. And so because these people are waiting, events are catalysts. CPI, PPI, they draw a line in the sand and they say, if it's not down by CPI, just get it done. Okay, so that's where we are right now. There are a bunch of people waiting for the ticket window to open for a concert. Okay, that's an analogy. I grew up with that analogy. Anyway, so the reality of that is unless there's an event, I would not expect a washout. Unless there's some sort of a geopolitical event, I would not expect a washout. Every other dip is going to be bought, especially on data, because there's buying out there. And I think the banks are the buyers now as well. So the banks are buying at $20 low, okay? The funds are buying at $50 low, and the central banks are buying at $200 low. That's the way to think of the cohorts right now. CTAs, they're making money. We don't care about them right now.
VinceLanci highlights the potential bullish patterns in both gold and silver markets. Unlike the debated cup and handle pattern, Lanci finds the head and shoulders pattern in silver more convincing to some analysts. Should silver break above the neckline of this pattern, which appears to be nearing, an expected move of about $8 upward is anticipated. Spot silver surged 3.3% to $30.55 an ounce on Friday, marking its highest level since February 2013. The white metal has been steadily gaining ground against gold, particularly in relative terms. In January, the gold-silver ratio exceeded 90, the most stretched since September 2022. Citigroup Inc. forecasts that if the Federal Reserve proceeds with interest rate cuts and economic growth remains robust in the second half, the ratio could move to around 70. However, the note cautions that a slowdown would push the ratio in the opposite direction. Regarding gold, Lanci notes a large cup and handle formation on the monthly chart, signaling a long-term bullish structure. The breakout from this pattern suggests a continuation of the uptrend in gold prices. Let's get back to the interview.
So there's silver. That's a monthly chart in silver. If this market closes anywhere near here at the end of the month, you will have massive money likely piling in. Technicians talk a lot about the cup and handle. I'm not a believer in that formation. I'm not going to argue with you about it, but I'm not a believer that formation is real. It's not structured the way I would structure it, but this one is real. This is the head and shoulders. People are calling this kind of like a rounding bottom. Well, this is a head and shoulders. Shoulder, head, shoulder. Now, it may not be perfect. You have to look at volumes and whatnot. But if this breaks, which it essentially has, if you draw it from here, it's broken. If you draw it from there, it hasn't. If this breaks, if you consider this broken, then this market has $8 to run. Okay, so that's enough for me for starters, right? Next chart, gold, a little bit shrunken there. All right, gold has. Let me see if I can make this a little bit bigger for everyone. I can't. All right, work with me. Here's your monthly chart. Here's your cup and handle, which is legitimate. And here's your breakout of the cup and handle, okay? When you look at a big structure like this, you know what your target is. My target is X, my target is Y. But along the way, you're looking for signposts. You see this here? Now, I didn't see this one. Someone else showed it to me. Actually, it was Jordan at the Daily Gold. This creates a measured move of this depth higher. Okay, this creates a measured move of this depth higher, and we got them. I saw this one. So it's kind of like these are little saucers or little cups or shot glasses, if you want, right? So a move like this should get you a parallel move above it if this is a bull market. A move like this, so you add these together, you get that, and you get that. We are at the level we should be at this point in the move, okay? So a pullback right now would not be unhealthy. Now, I don't want one, but it might not be a bad thing. Now, next chart. About a month and a half ago, someone asked me for a target. I think it was Chris at Arcadia, and or someone close to Chris. And I said, I don't really do targets, but I'll give you a level that I think we should hit. And I broadcasted it. This is a GAN fan. I'm not going to get into the details of it, except to say that I connect, if you people are familiar with it, it's a Fibonacci levels, but it's more oriented towards speed or time. So I connected the bottom of this, which is the low, and I connect a wick to wick, and I connected the December 3rd top, which was important to me, December 4th. And so I just let that go. And I've let that there for a while. And when we touched here and pulled off and then started back in here, and this is when the macro D started buying. Someone asked me where I think the market would go, and I said it should go to 2350 within 2 months. And that's what we did. I'm not taking credit for that except to say it's a good rule of thumb. Now, this is done. And I drew another one I'm not showing you here. The other one goes further back. So these things are very fractal. And if this line hugs, okay, I have another line coming on that gets us to 2470 in 2 months.
As investors navigate through mixed economic data and Federal Reserve announcements, the outlook for gold and silver remains promising. With ongoing uncertainties in global markets, both metals continue to serve as safe haven assets, attracting investors seeking stability and potential returns. What are your thoughts on the outlook for gold and silver? Do you believe the current bullish trends will continue? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.